On this video, we'll be talking about what we would do if we were new business owners that basically came across a $10,000 windfall versus a $1 million windfall. And what we mean by that is $10,000 or $1 million after all your expenses, after savings and like an emergency fund. So after all that, you have an extra basically $10,000 that you want to basically invest in the first case, and the second case would be $1 million extra. So again, this would be after all emergency funds and all that stuff right there. So we'll start with, what would we do if we were new business owners and we had an extra $10,000 sitting around that we had to basically invest? What would we do? Well, what I would do first and foremost is look for, hey, is there anything that I could do to improve my own skill sets or improve my own business? Like skills that I could learn that could further my business and basically give me greater return. It might be a certain skill that I could learn that might help my business. And, I would then look to see, hey, if there's nothing like too easy on YouTube that, I could use for free, is there, maybe a course for, like $100 or a few $100 that I could purchase that seems to be, reviewed and rated well, where I could learn some new skills that I could immediately turn around and make, more money in my own business, whether that be you're running your own business or it's a skill that you're working for some clients or stuff. Is there anything that you could learn that would be worth a lot more in the future? That's the first thing that I would do, because that probably has the biggest ROI and it's probably the biggest basically guaranteed thing. I would also look for at least a portion of that, like let's say maybe a couple grand or so of the 10,000. Is there anything that I could get for my business that would maybe save me some time or some stuff that I could outsource, like maybe some SEO work or some video work or maybe some marketing? Maybe I could pay for some Facebook or AdWords ads to experiment around to see if I could get some more sales. So I would definitely set probably about, a fifth of that aside right there, just to play around as like a marketing budget and also a learning budget to see what I could do right there. But also as a new business owner, if I were in their shoes and I had the extra 10,000, so with the remaining 8,000, what I would probably do in that case is, that's not really enough money to invest much in like real estate or anything like that. And if you only have 10,000, I probably wouldn't look into like a mortgage or anything like that for, like real estate investments, because you want to have, a decent amount of money saved in case of emergencies for like your properties and stuff like that. But I would look to maybe take $500 a month, invest that, in stocks and such. Just force yourself to set a small amount of money aside from that each and every month. But at the same time, I would mostly focus on what could I use to improve my own skills or improve my business or save me time there, while at the same time setting some of that aside for stocks and stuff in the long run, like an S&P 500 fund, just to get some kind of savings going for like a rainy day there. Sean, what would you do if you were a new business owner and after all your savings and emergency funds, you had an extra $10,000 in 1 year?
So if I've got 10 grand, and I'm going to assume that since Brian's covered all the really good ideas about investing in yourself or seeing how you might be able to leverage that in your own business, because investing in yourself is always going to be the very best thing you can do. I totally agree with that. But if we're going to take and we're going to diversify outside of our business with the money, then I would take that 10 grand and I would simply split it into, probably in this case, 5 parts, one of which would be $1,000, because I'd take that and I'd just put that into big crypto coins. Like Bitcoin, Ethereum, that kind of thing. I'd buy like $500 of each, just let it sit. It's going to go through ups and downs, but it could be in 10 or 15 or 20 years, it's worth a huge amount of money. And then I'd take the other 9,000, I'd split it among 4 or 5, either stocks or mutual funds, and simply invest in something that I thought had a good future. If you don't want to have to do a lot of research and spend a lot of time, then you just buy index funds. You can buy a NASDAQ index fund, an S&P 500 index fund, and a Dow index fund, and a technology index fund, and whatever, just to get yourself some diversification, because even in the smaller amount of money, what we're looking to do is have some diversification, and we're looking, if we're going to invest, to have time work on our behalf. And the younger you start investing and the longer the time works, that's how you get to be, rich. Now, you might not be Warren Buffett rich from investing over time, but, he started a long, long time ago and kept compounding his money gets to get richer and richer every year, in part because he lived long enough and didn't spend all the money. That's where I would be in terms of actually investing the money. Like Brian said, I wouldn't be buying a house or real estate with it and leveraging it and tying up all my money and then having to worry about cash flow or anything else at this point, especially if it's, if you only have an extra $10,000, your business probably isn't on super strong footing, and I wouldn't want to get you off and focused on something else when you should be focused on the most important thing, which is managing and growing your business.
All right. And the next part would be, what would we do if we're new business owners and we basically came across, let's say, $1 million that we basically couldn't invest or do anything we wanted with? So let's say we had a really successful business, made a lot of money. And again, this is assuming you already have an emergency fund of 6 months to a year, assuming you have all your bills paid and all that. So after all that, you have basically an extra $1 million. So I'll go first on what I would do. And I'll actually break this down a little bit. First and foremost, let's say there's like $1 million or so. I would probably take about $100,000 of that and say, hey, what could I do with that to reinvest that back into my business? Maybe hire some help, not necessarily an employee. That might be like a little risky unless you're fairly certain that, hey, if I hire this guy to do this work, it will save me X amount of time or make me X amount of more money. So it wouldn't have to be an employee, but it could be maybe like a contractor that you look for, maybe a handful of contractors to do various things, whether it be like a sales guy, a programmer, some ad management stuff, whatever it might be. So I'd say, hey, take $100,000, look, what could I do to invest that in my business to get some additional help to help me make more? Because if you have an extra $1 million, you did something right in that business. So what is it that you did right, and see what you could do to kind of replicate that and maybe hire some additional help to do a bit more of what you did yourself or what your current workers did to help there. So with that, I would do 100,000 of that. I'll just write that down to make sure it adds up to $1 million. And then after I did that, I would probably take maybe an additional $100,000 and throw that kind of in like a high savings yield thing, an additional, not necessarily an extra emergency fund, but an extra emergency fund and also a future opportunity fund. So say, hey, like maybe there's a really interesting opportunity, or maybe there's like an emergency that basically pops up in your business where stuff doesn't go so well. So you want to have some additional funds left over there just in case. It's always good to have some extra cash on hand, even on top of a fairly decent sized emergency fund. And then after that, I would probably take approximately 25 grand of that and say, hey, are there any kind of maybe masterminds out there, or are there any events that I could go to and attend, like maybe a few a year, to meet some additional contacts in my field to try to grow the amount of people or the amount of contacts that I know to potentially push the business forward even more. So maybe set essentially 25K aside, kind of like a travel budget, or like for basically conferences or masterminds or anything like that there, because that's, again, you're doing pretty well right now. So meeting a handful of like-minded people can help that even more. The other thing I do, I'd probably take an additional 25 grand and look to see, hey, is there any stuff that I could outsource around the house to save me time from basically doing stuff that I don't like, to focus more on the business or stuff that I enjoy more. Like that could be as simple as hiring like landscapers or mowers, or wintertime, if you live in like a snowy environment, could be snow removal, could be also like maids or anything like that. Like what can you do to save yourself time, or even like a handyman to help with some stuff around the house? Because I see a lot of guys, and this is a mistake that I see a lot. There will be guys that make a good amount of money, and I'm talking in some cases even millions of dollars, and they're spending time on stuff that they don't enjoy that they could outsource for a tiny fraction of what they're worth. Like I've seen guys try to work on like a handyman project because they're like, hey, I don't want to spend $500 on this project here, even though it might basically take them like a few days to actually do. And if you look at what they're actually worth and what they make, it's ridiculous in hindsight. I actually know a guy worth a decent amount, but if he has to chop down a tree for an entire day or two, he'll spend the time to do that because he doesn't want to pay the $500 to something he knows he can do himself. I've also seen on the business side people that they're having let's say, like a problem making a blog or a website, or trying to update a site, or trying to add in a plugin or something like that, they're not really techie, they'll spend days and days trying to figure this out when they could go to Fiverr and for $5 hire a person to add the plugin in, or hire a person to fix whatever it is it might be, and literally save thousands and thousands of dollars of their own time, of their own value right there. So that's what I would do with that, and that would be, we'd be up to essentially $250,000 used right there. Then the other thing that I would do is, for me personally, I would probably take 500,000 of that and probably invest in some form of a multi-unit real estate in cash, mostly looking for something that basically cash flows really well. So I'm looking for basically decent rents, whereas like the appreciation would be a bonus, but I want to focus on the extra additional cash flow that I would get right there. In today's market, I'd probably look for something with probably around like an 8% return just on the cash flow, just on the rents. So not including any of the appreciation or anything like that, which, you know, is very doable in a lot of markets, maybe not in all markets. And the advantage of that is it basically gives you some additional revenue each and every month, where worst comes to worst, you're making something there, it's hands-free, it's a little extra dough, and that would leave us with approximately $250,000 left. And I'm assuming you don't have any like major debts. If you have a bunch of major debts, if you have like a lot of basically credit card debt or stuff like that, you definitely try to pay off those right there. But assuming you don't with that, with the remaining amount, I would probably move most of that into stocks, and I'd probably have it be so approximately 2/3 of it would be fairly safe in like an index fund, where, you know, very, very passive, and then maybe for 1/3 of that, I'd have it be something where it's like a little more, not necessarily risky, but invested in like a handful of businesses that maybe you know a little more on, or maybe you think, or you have a hunch that they'll do better in the future, or it's a product that you think could basically take off. So worst comes to worst, if you lose out on all your individual picks, which if you have 3 of them, it's probably unlikely that you'd lose on all 3, but if you do, it can happen. You still have essentially 2/3 left in the S&P 500, which, you know, no one's saying it's like impossible that it like won't go up, but like throughout the history, it's always gone up. And if stuff doesn't basically go up over time, that's probably basically an indicator of much larger problems that you have to worry about. Again, not a financial advisor or anything like that, but that's how I would mitigate the risk a little bit there. And so that's what I would do with mine. Sean, if you had an extra $1 million after all your expenses, after the emergency funds and all that, what would you do with that?
Well, first of all, I probably wouldn't think quite as hard as you did, but after I buy the first $1 million worth of lottery tickets, I'll be filthy rich. I'll win the $1 billion lotto fund. No, I'm just kidding.
Sounds like a plan.
You covered a lot of things and a lot of very good things. So I'm just going to assume, so for the sake of doing something different, that we've got this money we need to invest. So what do we invest it in that we're going to actually buy assets, or how much of it should we even use to buy assets? And the first part of it is, obviously, should we go leverage ourselves into real estate or pay cash for real estate, as you suggested? And that's going to depend upon where we are in the cycle. Obviously, real estate's going to be, ups and downs. And as long as we're not, in a frothy top, then it's a great thing to do, especially if you're younger, because you can diversify that. And as Brian said, if you buy things with multiple units where you've got, even diversification in there, you're not relying upon one person for cash flow, that's awesome. And you can also have somebody else deal with that and manage it, so you don't have to worry about that. Part of it, you actually should reserve and keep in cash, or some kind of a higher yield investment than cash. Now that we're off the bottom right now as we record this of the interest continuum, where you almost had to pay the bank to keep your money, you can get 2 or 3% on your money, and no, you're not going to get rich doing that, but having some powder dry, as they like to say in the investment industry, where let's say you've got 200,000 or 300,000 of that $1 million set aside, because at some point the market's going to dip and you're going to be like, hey, this is a temporary correction and I should go put half or all this money in. You want to have that money to be able to put in. Or you now find a great real estate deal, so you want to have the money to go buy that deal. If you've gotten rid of all your cash, then you don't have the ability to go take advantage of that deal, and so therefore you want to generally have some part of your cash on the sidelines. Traditionally, if you're just like going going to go invest in the real estate, in the stock market, the old way of doing it was to look at a diversification between stocks and bonds, and depending upon your age, how much of each you might have, but a good portion of it in bonds, because bond yields were significant at one point in time where you could get 4 or 5% over time on bonds, which meant, well, your stocks are gyrating like crazy. Maybe it's up 20% one year and down 18% the next year, and over time it's great, but in the meantime you're getting whipsawed. The bonds created a nice income portion for that portfolio. Up until recently, for the last couple of years, bonds have not been your friend if you were going out to buy them because the yields were so low. The same reason we could borrow money for cars and houses that were so cheap. That's starting to change now, and I think in a little bit you'll have that opportunity to lock in some pretty good yields. And I know people who are just starting to invest are thinking, wow, I want to make like 80% a year on my money, and yes, so do we all. And if everybody could do that, well, guys like Warren Buffett and Bill Gates and really big, super rich investors would be doubling their money every year or two, and they're not. And so if they're not, you can't expect that you're going to be able to do that. And again, time is going to be your friend. But I would diversify that money. Again, like I talked about at the beginning, I would split off some part of it, 5 or 10%, and buy into some big crypto coins, because that might be a home run somewhere down the road. It's not going away, clearly. And then I would, like I said, keep part of it in cash and then either invest in real estate or stocks or some combination of that. And again, diversifying when I invested in stock, whether it's in some really larger blue chip companies with some smaller flyers that I have researched and want to get into, or again, just buying either index funds or mutual funds and letting somebody else do the thinking, or just the market as a whole as to what goes on with it. And in part, that would be me looking at the landscape at the time, right? So as we look at 2022, when we're recording this, right, you look at it and you say, okay, we've had, the stock market is down, since the beginning of the year. At one point, it seemed unstoppable. Now it's come back and, corrected a little bit. If you looked on Facebook, there are people saying, oh, the stock market's crashing. It's not crashing. It's not 1929 all over again, nor is it going to be, do I believe. So, now that the market's down 15 or 20% from the highs, great time to be in it. 5 years, 10 years, 20 years from now, you would have looked at this and said, what a great time to have bought almost anything.
Yeah.
Invest, and time is your friend. Real estate, stocks, whatever it is, and just, again, diversify, keep some cash dry unless the market's, cratered, in which case go buy as fast as you can, because when everyone else is panicking, that's when you actually wanted to take that extra money and go buy. And that's what I would do.
Yeah, so great stuff. I think that's a lot of info right there. I think that's a lot of very, very valid points there. So it sounds like, we each have like a slightly basically different view or like opinion on it. We each have like a little bit of, kind of stuff more risky, but I think the main basic takeaway is, you definitely want to have a decent amount of that and something stable, and, definitely want to see, hey, what you can put into your own business, what you can have as like a backup fund, and then a decent amount that you put into investments, whether it be real estate, stocks, or, a small amount in some riskier stuff like single stocks, or, in Sean's case, like essentially crypto and all that stuff right there. So with that, if you like this topic or any other topic, how you as an entrepreneur can make more money in your business or in your own life, make sure to like and subscribe here, and make sure to watch out for our next video. Thanks much, guys.